Fala pessoal, bem-vindos a mais um Papo SB Cripto e hoje a gente está aqui para estrear o nosso primeiro Papo Internacional, vai ser o nosso novo programa em que a gente vai estar, por enquanto, fazendo aí uma vez por mês e a gente vai tentar trazer aí pessoas do mundo todo com experiência em cripto, com experiência no mercado internacional, para estar também discutindo como começaram essa primeira jornada deles em cripto, o que eles estão vendo do mercado hoje, todos os acontecimentos macro, né? A gente sabe que não está nada fácil navegar por esse mercado aí, tanto de cripto quanto mercado acionário, e também o que eles estão vendo aí para o futuro. E hoje, o nosso aí convidado especial, nosso primeiro episódio, a gente tem aí Andraž TUŠ, foi CEO da TUŠ, que é a maior rede de varejo de supermercados de propriedade eslovena da Eslovênia, e agora ele é fundador da Wisdom Labs, uma startup que visa construir uma plataforma de AI que conecte todo o conhecimento de varejo juntamente com as outras empresas, né? Então, muito obrigado aí a todos e espero que gostem do nosso papo.
Okay, so now
Obrigado, Rafael.
now we continue in English, and my
Sure.
name is Arthur Fortunato,
And I'm Rafael Porari.
and
My
this
name is Andraž TUŠ.
yeah, and this is the first Stockpool Crypto International episode, and Stockpool Crypto is the first Brazilian-based international research house aimed specifically to the Brazilian public. And today we have our very special guest, Andraž TUŠ. He is former CEO at TUŠ, the largest Slovenian-owned grocery retail in Slovenia, and now founder of Wisdom Labs, a startup that aims in building an AI platform that connects all retail knowledge and makes it actionable. So, hi again, Andraž.
Hi, thanks for the introduction, Arthur.
Awesome. Okay, so Andraž, I think we all want to hear about your crypto background, how you started, why you started in this role, because you have a lot of experience and you came from a really good background, which you worked for retail. Your family has been in retail for a while, and crypto, it looks almost as the opposite of retail, a sector that, at least from the outside, now correct me if I'm wrong, you're gonna have time to explain, but looks really backward looking. It's just like bringing the basic needs to people. So why did you get into crypto? What do you find in it?
Yeah, great question. Thank you, Arthur. Thank you for the introduction. I'm honored to be on the first episode of Stockpool Crypto. I'm glad you guys decided to do an international version, so I'm glad to be the first guest. Yeah, retail and crypto, two very different categories. One is a business, one is a hobby, for me at least. And retail is our family. Grocery retail is a family business. And on the first hand, it looks kind of boring, but a lot is happening in retail. A lot is happening in terms of technological development. There's a lot of software we use for improving our business processes, for being more effective, being more productive. A lot of analytics, a lot of data. Actually, in terms of data, it might be the most data-rich industry out there, just because we have such a huge amount of items in our stores, and along with the huge amount of customers. So, several hundreds of thousands of customers visit us each year, and we sell probably in a span of a year, probably sell like 50,000 or more items, because the assortment is rotating. So the active assortment is always lower than that, but through the year we sell that kind of number. That's the number of different items we sell. So that creates a huge amount of data that can be used, for various different purposes. And in the last 20 years, big search engines have been using this data for basically targeted or segmented advertising. And what I think is the future. In the future, we're going to be seeing, and we're going to be wanting to be seeing and using solutions, retail solutions, and visiting stores where the service and the products are personalized to us. And we see this in products and brands that are going into personalization, where you can design your custom iPhone case, with your name on it. And I know Nutella had customization project available on their website where you could customize your tela with your name and your pattern. So I know brands are doing this. This is definitely a way to go. But I think retailers, with all this data, we can go even further. We can use this data to predict customers' behavior. We can use it to make your life easier, to make the shopping faster, a lot faster. We've already been proving that with our online grocery store. It's translated to quick purchase, hito na coup. So everything revolves around creating a really smart recommendation solution that recommends a small basket of items, like 40, up to 40, 45 items that you are most likely to buy in that moment. And it's working really, really well. I think around more than 50% of items that customers buy, they buy from the recommendation engine. And I know my wife is really savvy, and she's able to fill up a basket of 50 items in about a minute or so. So it's a very, very productive, efficient solution compared to going to the store physically. And I think the development is going to get faster, and the service is going to get better. We are also famous for being, one of the best online grocery service available in the country, because we're so focused on providing the customers exactly what they want. And if we might not have something on stock, we call every customer and we tell them, like, this item is out of stock, and we recommend you take this one, or would you like us to take this one or something else, for every item, even if the item only has, a less than expected amount of shelf life available. Then we remind the customer, look, this cheese only has, 3 weeks left. Is that good enough? Or should I replace it with something else? So we're famous for our customer service. That's been actually the number one driver and differentiator that we built for ourselves on the market. And I'm really proud of that. And we basically designed that from the beginning, not thinking it was the most important thing, but it turns out it is the most important thing. If you've been following all these startups, and you have a bunch in Brazil as well, quick delivery options.
Yeah.
I think you have iFood or something.
Just ordered some. Yeah. Great food.
And Faca is also a good one.
Yeah, all these solutions, they basically go for super fast, convenient delivery. And there's definitely a huge market for that. And I'm not saying we won't do this in the future. I'm probably sure we will.
Hey, some insights here. Already having some insights.
Yeah, great. I've been doing them all, sorry, but this is really proud of this solution that we have, and customers love it, and I love it. I use it every day. I provide feedback, good and bad. Especially when I see bad, I bug my team all the time when something's not working the way I want. So it's very data-driven solution. We fix it based on customer feedback as fast as possible. We usually turn around things in around a week or less. So yeah, I'm super proud of this service. That's just one small part, but growing. Definitely growing really fast.
Yeah, Andraž, I have actually a question for this.
Sure.
Do you think in using the blockchain technology, like maybe in the near future, like integrating with crypto payments, how do you see that happening in your startup?
Let me just add to it. Are you thinking about metaverse in any way? I think they're complementary questions, so just throw that one as well.
Yeah, I've gotten questions about that, both of those topics. Yeah. The first one is we've already implemented crypto payments in our stores. We have crypto payments since, I think, the last 4 years, maybe more, 5 years. We did it through a local Slovenian provider, a successful startup, if I remember correctly, that has a pretty significant amount of stores accepting through their service. And it was a great success. People loved it. It was in the right moment. We were very early. I'm proud to say we were early, and I think the technology itself is fairly simple. It's fairly simple to implement, which made it a lot easier to do than first expected. In terms of the blockchain technology, blockchain offers a really deep level of transparency. So I think it can be used for that strength, meaning there was this, actually, this is a pretty successful crypto startup, a Slovenian crypto startup that did this. I forgot the exact name, but their product was basically building a blockchain for traceability, for transparency of the supply chain of products from farm to fork, basically. So I think that's like the number one obvious application you have. And the metaverse part that Artur asked, the metaverse, there's a couple of grocery retailers that are going into the metaverse. I know Walmart have been pursuing something. I know Carrefour from France has been doing something in the metaverse. I think it's very early. I don't see a really useful business model on top of the metaverse, more like just a game or gamification of shopping. I think it's still, the technology is at a level where it's still less convenient and just like a hassle to go to do your shopping through a metaverse user interface. That today I think is not doable. Maybe in the future, I don't know how long. But we haven't been pursuing any solutions in that direction yet. When I see something interesting open up, I'll be on it. I'm definitely following the technology.
Great. I read a lot about the RFID, the identification for products, like the small chip they started putting in the beginning of supply chains, but that is not even close to what the blockchain offers, right? What I saw into it, they just like, you only have SKU for that. It's only what the product is, not where it came from, what are the steps in the process, where exactly it is. So I really think blockchain for supply chains is going to be a great solution.
Yeah, there's RFIDs. I can see why, because it's hard to distinguish one product from another. I'm talking about the product with the same barcode. So products with the same barcode, they have no other information apart from the name of the product, right? You don't know when it was made, when it was picked from the ground, from the tree. You have no information apart from what it is. So the data in terms of the products today is very manual. You basically have to input everything into the database. If we had that data on the item level, that would be amazing. That would be a revolution. But it would multiply the amount of data by a million, probably, or a billion, on a yearly scale. But I mean, you can solve that. That's not so hard. Probably the first part is harder.
Does that go into a bit of what Wisdom Land does already?
Yeah, Wisdom Labs is building, overall, the big picture idea is to build a platform that connects all the data and makes it actionable but not just data. So it connects the data and turns it into knowledge. What we mean by that is knowledge is something that you can use to make decisions, right? Data itself can be very misleading. It can be a bunch of numbers on a spreadsheet, and it can tell you nothing. Most times it tells you nothing, or it tells you the wrong story, right? It gives you wrong messages many times, and that's my experience. So knowledge is basically something that tells you, look, this customer segment is growing and you should pursue this and you should cater your service to this specific small niche customer segment. That's knowledge. That's something you can use. Even better knowledge is this customer segment loves this specific product. So connecting not just the segments and the products and then having the story to tell around that interaction. This customer loves dark chocolate flavor. That's why they love these products. You should put more dark chocolate items in your assortment. And that's the magic of having actionable and connected knowledge in your organization and using it.
When you started talking about how raw data doesn't mean anything, you reminded me of a book I'm reading from Václav Smil, Growth, and he puts it exactly in those words. He even brings a lot of data from 1920s and 30s where people started putting exponential curves into population growth and other things, and they're predicting the population in 100 years. And they couldn't be more wrong. They're like over 50, 60% wrong. And they just got the beginning of the curve right, but they couldn't predict the rest. So it's perfectly. It's like a perfect fit to what you're saying.
Yeah, there's this saying, it goes, um, predicting something is really hard, especially when it's in the future. It's very simple, but at the same time, kind of funny. And yeah, so many variables. You can just look at the weather reports. Weather reports are an example of a complex system. So weather is a complex system because there's so many different factors affecting it that we can never put it in an accurate forecasting model. And it's kind of like that with human emotion, with human behavior, right? Right now, we're in a phase where everybody is thinking about the global economy and predicting that it will collapse, right? Sooner or later. Everybody's thinking this, everybody's feeling it, and everybody's saying it, but nobody's changing their human behaviors. And that's what the data is showing, basically, that the last quarter of 21 and the beginning of the year, we were still ramping up spending. Spending was basically unchanged across the globe. It's only now beginning to kind of, slowly falter down. I was buying not buying. I was just at a store. I'm buying a pair of gloves, basically, at a motorcycle store, buying a pair of motorcycle gloves. And I asked about the bikes and the availability of the bikes, and the salesman said that they basically sold all the bikes they received for the year, and the latest I could get the bike is next year. So he quoted me basically in 10 months. I'm like, hey, these are motorcycles. Like, who the hell buys so many? Like, there's always been motorcycles on stock, I mean, and cars also, any assets or these things, these consumer goods like that never went out of stock like that. And it's just insane in the phase we're in. Just we are running out of things, and the supply squeeze that was caused by the global COVID lockdown just caused a number of issues down the line. And now we're kind of getting to a point where we're going to start to feel it, I think.
Yeah. And with interest rates going up, you can't like buy something to receive it like in 10 months, 12 months. It's like you're going to lose at least 5-10% of your value, even more so when you put the bike on the road. It's like already 20% off instantly. So it's even worse.
Yeah, we kind of transitioned into the macro environment now. I don't know. I'm looking for a good advice on that part. I'm thinking of buying something. I'm thinking of buying a motorcycle, but I don't know if it's a good time or a bad time. Financing it, definitely a bad time. Anything else? How will it devalue? Will there be a market for motorcycles next year if everybody bought their motorcycle this year? Just with any kind of good, any kind of long-lasting good, even buying, a new phone, a new computer. Maybe it's hard to get this year, but will I be able to sell it if I need to? Or if I have excess stuff, if I need to sell something, will I be able to? Will there be a market next year?
Yeah, I think before we
Hard
get
to
into
predict.
the macro, deeply into the macro, because we're always into the macro. It's about everything. It's
Sure.
so present in
Yeah.
our lives right now. We can't not talk about macro. But I think we'd like to know a little bit more about your crypto background. Like, when did you start?
Yeah.
Why? What got you into crypto?
I should look at when I logged on to Twitter for the first time, because that's probably the beginning of my journey. I think it was late 2015, maybe early 2016. Give me a second here. So yeah, I actually talked and did a lot of research even in college when I was in school in California, in USA. I had a friend. We were talking about crypto a lot. We were talking about Bitcoin, talking about Litecoin. I remember at the
What
time.
year was that?
Exactly. I'm trying to. That was. I was in school. I was in school 2011 till 2014.
Okay.
Actually, 2010 I was already there, but then 2014 I graduated. So 2010, the end of 2010 to 2014.
So
I was there
Mount
for 4
Gox
years.
candle. Somewhere between Mount Gox
Yes, but
candle.
I didn't. I wasn't in at the time. I was just researching. Mount Gox candles happened somewhere around that time. Yeah.
Okay.
I was not around to see it, fortunately. I joined September 2015. Yeah, that was about the time I got into the crypto myself. So until then, I was a spectator. I was following. I even know I pitched it at an interview I did when I was in school. I pitched Bitcoin as the stock. I follow. I still remember that because the other side that was interviewing me was fascinated. So we got into this conversation. It was great. Nobody knew much about it at the time. Everybody kind of heard about it. Nobody understood it. And then after I got into it, I probably spent a year or two even researching, really, really researching a lot about the technology, trying to understand every single detail about how it works, why it works, what's the target, what the goal is, who can use it, who can't, like what does it mean for the global economy? Why does it need to exist? The purpose of it. I thought it was great. I thought I understood the point of decentralization really made a dent in me. So it really left a mark, and I wanted to be involved. But I started really slowly. I was a skeptical investor. I knew I was bad at trading, and obviously I tried to trade it. But the reason was I didn't really try to trade it because I wanted to like make a fortune. I was trying to learn. Because when I was thinking about going to school, I was still thinking like, which direction should I go into? Should I go into finance? Should I go into marketing? And I was really contemplating finance. So the first idea was just let's learn how to trade first with small amounts, really small amounts, and then later I'll see if I do well. We'll see if we can scale up a little bit. So I've been in it for like 7 years now, and count. I guess almost 7 years. I've seen a lot of cycles. Cycles are really fast in crypto, faster than in the stock market. They say they're 4 times faster because it's 24/7. It might be even faster than that, actually. It makes you feel older. It makes you feel stressed out on some points. There were years when I went without even looking at it, reading about it, but not looking at the charts. I went years like that just because, I decided I'm not a great trader.
But you were
I don't even
invested.
trade well. I was invested. I did not trade well, so I'm just gonna leave it, set it, and forget it, because I'm just making it worse for me.
Turns out it was a great decision, I guess.
Yeah, overall it was. I did learn a lot. I did learn how to trade. I also learned that I'm not a great trader. Most people are not. You have to spend a lot of time. Have to have nerves of steel. I think there's a lot of great material to learn out there as a trader. Technical analysis approach, or fundamentals approach, or any other quantum whatever technique you have, or you want to use. All these indicators out there to help you. But it's not like math. It's something where there's always somehow, some way that you can find some arguments to support your argument, to support your narrative, right? Whatever the story is, this is going to go up, this is going to go down, this is going to go sideways. I have a story why that is so, right? When you're predicting the future, you can predict it and argue it any kind of way possible. It all makes sense. We were all very optimistic about Luna and Luna and Terra ecosystem, like predicting everything is going to be great. And there was very few individuals who predicted that it might collapse. And yeah, what happened was crazy, but it did happen. The most unlikely thing happened. And in retrospect, it wasn't that unlikely. It was actually quite likely. Obviously, it was made on very bad foundations, I guess.
Yeah,
and I don't think anybody has an idea.
Yes, we never imagine also like a layer one, a 60 billion market cap collapsed in less than 2 days. Like we knew about the UST DPEG and everything, and then after also watching lives and podcasts about the people that were against UST, debating with the people that were like always in favor of wealthy people or any other type of investors. Galaxy, another example. They always have good arguments, and Luna, I believe, was getting there. The adoption was getting, but also the macro part, I think, didn't prevail. They survived 2021 when they lost the PEG, but because of the macro conditions, the Fed were still printing money. Everybody was like risk on. It's still in 2021. Didn't care about inflation. Didn't care about a recession. And I think that was like kind of lucky of them to keep surviving another year, let's say.
Yeah, it was a signal. It was a signal that, it might happen again. What can happen, what can go wrong will go wrong. That's also a great saying I like. And it did. It went wrong a lot.
It is. And I think we got very good lessons from Luna that like we can apply for the next 5-10 years, for our entire life, not even only in crypto, but like in every market. And obviously when you're going to have a bull cycle, another Luna is going to pop up, another we were talking before, another OHM fork is going to happen, Wonderland, and thing. In the bull market, those projects always comes around, and they come in different, like you've been since 2015. You've seen this before, like the ICO era during the Ethereum bull run, 2017. It was kind of similar. We had the DeFi summer here with the tokenomics, like all pump and dumps. We were talking about Pancake Swap listing like a bunch of irregular tokens and scams, and that's gonna keep happening. But I feel like the space is gonna mature even more after this bear market, that's for sure.
There's a lot of talk about regulation, and I've seen a very intellectual post that I was reading on. I was doing some research today in the last few days. I think regulation might actually help. It might, it's not what we want, because the purpose is decentralization, it's having no government control. But I think what caused these extreme public failures of this was a failure of trust, basically, because these guys, these institutions that came in, they were selling these products, because behind Luna there was an institution and an individual driving this hype, and we've seen now, when we were having had the DeFi contagion now happening in front of our eyes. It's the same thing. There's just a lack of regulation causing not unprofessional, but just people inappropriate individuals, just like going into something they don't know about. They had no risk management. They had no experience in the financial markets before. Basically, just trying to trying to operate as a financial institution, and being quite naive. The story with the CoinFlex and lending money to Roger Ver and not liquidating him based on verbal promise of providing collateral. That is the most ridiculous thing I've read. And I would say, like, okay, maybe he borrowed 100,000 or something, some manageable amount. The guy borrowed 47 million, and they didn't even have a contract or any kind of, they wouldn't liquidate him upon the when the margin call happened. They wouldn't liquidate him. I don't know how that's in what universe that makes sense.
Yeah, I think
even if you have to call the guy to let him know, it's already too late. Like, you're already underwater. It's way too risky to do it. I don't know who would do that.
I think the Celsius network trial that's going on in New York is quite illustrative of that. They gave KeyFi KeyFi is just they like try to get high rewards from investing, and they got Celsius hired them, and upon a verbal agreement sent them like over $1 billion so they could invest at their will, and they simply didn't pay up. There's a whole bunch of problems.
And they were supposed to hedge against their positions, like without
knowing the positions.
Celsius was
that was the problem.
Hedge. Yeah, exactly.
Yes, and like, how are you gonna hedge something that you don't follow, or you don't have, like you said before, risk management? Like,
and the weakest part, which was like KeyFi, they did everything correctly. At least it seemed like that. Let's see upon trial, but from the looks of it. And Celsius, which is like theoretically the big bank, they weren't doing anything they should have done. So it's kind of really illustrative.
And not hedging while being overexposed and over leveraged, it's a recipe for disaster. And you can always see it's not the first time this has happened. Like every time the market goes down, it just reveals all these scams and fakes. All of a sudden, you see like all these projects are illiquid, completely illiquid, unfund. I mean, undercapitalized and everything. And now we're seeing it. These guys trying to play financial lenders, where the game is being over collateralized. That was the main lesson learned from the last financial crisis that came from real estate.
The subprime
The
crisis.
lesson was, yeah, subprime loans. Like you're making ninja loans. My favorite. That's my favorite lesson from that era. Ninja loans. No income, no job, no assets.
No, lending to
That's
people's
basically what
dogs.
Celsius did. Yeah, that's basically what Celsius did. You have no money, you have no asset. Don't worry, you can still borrow.
Wow.
How much do you want? You have $1,000 in your account. Great, we'll give you 10. Like I don't know what the logic is. I don't know how that's supposed to work.
Yeah,
Yeah.
it has been proven again and again. It only works in bull markets,
Mm.
in bull cycles,
Mm.
because capital
And
is just running freely.
and why I think we were kind of fooled by the Luna experiment, because in 2021, Luna's cap was way bigger than USD, right? There was a factor of more. It was a factor more than USDT Terra. And when the market cap of USD kind of got close to Luna's market cap, that's when the problem started, right? That's when speculation began. And I think that's why somebody, because it was clearly there was mm, some not evil, but I'd say just some actor who wanted to get funds out fast, or wanted to see if the market, can survive this stress test, right? And he caused the wave of exodus from Terra, which resulted in the 5-day collapse. As long as it lasted, it was one of the fastest, most egregious collapses, 60 billion market cap collapse that's ever happened in crypto. Maybe probably any other market as well. Haven't heard of a market collapsing that fast. They're
Yeah,
comparing it actually to BitConnect, right? But this was 10 times the size.
yeah, it's almost comparable to Bear Stearns, what happened in 2008, but it was in a much shorter period of time, and that's what I
Exactly.
always
Yeah.
say. In crypto, we're still like in a no man's land, and we have no central bank to help us out, and the contagion is, it's still not as big as it was in the subprime, but like if something of happened the same way it happened to Luna in a normal market, we'd have everyone stepping up to save it, to not let like $60 billion disappear. But no, we're
And
decentralized.
and they were calling for institutions, for funds to come in and lend the money to Luna to prop it up. But when they started talking, I was looking at the chart of USD to dollar. It was just I don't see it happening. I was very skeptical they would be able to pull it off, because when it was at 96, they were like, it's gonna get back. When it was at 90, okay, bigger issues there. And it's like at 80, 75, 60,
Yes.
and then we're just like, that's a death spiral. It's not ending, not ending. And it looked like it was going to get better, but it didn't. That's when all of us realized, okay, I understand the problem of an algorithmic stablecoin that's backed by a unstable crypto, right? Unstable shitcoin, basically. So if there was a system, a mechanism, that would have it be backed by something like Bitcoin, which is still bad, still unstable, but much more stable than what Luna was, where the market cap is not like 1-to-1, then it might have worked, I guess. But I still don't know what the best recipe is for an algorithmic stablecoin. Although I love the idea, I think the idea was great, and the idea of algorithmic stablecoin really, really, and obviously high interest rates for earning on Anchor really, really did a lot to market the idea of a stablecoin that's really providing a huge amount of interest, more than any bank ever did, probably.
Yeah, I think you went right into what I was going to ask, which was about the stable coins. So let me go into another question, which is, do you think they can work? Do you think it's necessary to have a stable coin for a decentralized system like we're in crypto?
So full disclosure, I'm not an economist or like a crypto expert.
Yeah.
I've just been in it, and I've been, reading and educating myself on a lot of these topics. And like I said, I like the idea of stable coins, and I think a lot of other people recognize the value of stable coins. And I think they're an important part. They're really, really an important part of the ecosystem. When I started, there was no stable coins. We had no problems in dealing with fiat. I think this is not something that exchanges are doing to, or at least started doing, to kind of either optimize their balance sheet or maybe simplify the systems. I don't know what kind of security you need or what kind of regulation you need to follow if you have fiat combined with crypto in a pair. It might get complicated there. I don't know. I know that stable coins specifically, one of the first and the biggest is Tether. I don't know. I never know how to pronounce it. Tether. USD Tether was one of the first and is now the biggest. Really made that easy, simplified that. So I think now they're becoming crucial. They are crucial in the ecosystem, and now more and more are being made. Although there's a big advantage to being the first mover in this space. But I don't think the danger maybe is that people don't separate the two, so they don't distinguish between USD as a fiat and USDT as a crypto, as a stable coin that has some hypothetical reserve that's held by this company that's supposed to manage it. That's not regulated. So I see a huge risk with that. The same kind of risk I saw with USD. I didn't see any higher risk with USD. Actually, I thought it was actually better because it's managed by an algorithm. It's very transparent. If something goes wrong, we're going to see it. If the USDT doesn't have any backing or doesn't have enough backing, nobody's going to see it. Nobody's going to know until it's like way too late.
And you're not wrong on UST. Everyone saw it.
Everyone saw it.
Everyone saw it. And even if you look at USDT, it didn't come back to peg yet because there's people like shorting USDT because they believe it's not backed one by one with USD. So yeah, it's still kind of shady. And USDC, the circle one, it's the safest one, and obviously regulated by the United States. And I can also see like the stable coins, not even for crypto, but it's good for the entire world. We can see like even here in Brazil, Argentina, everybody's using these stable coins like to get to hedge against their own currency. And I think that's pretty interesting. And everybody's looking at it like different ways. Now they want to, like the government wants to issue the CBDCs. I'm kind of against it, obviously. I prefer a stable coin than a CBDC. But it's very like nice to see everybody like moving and understanding the risks of like stablecoin now, and actually like realizing that it's not 100% safe as everybody thought it was 1 year ago.
I think Russia and Putin would be the first ones to agree with you, since they had all their dollar reserves confiscated by the US.
Yeah, they started moving to gold, so yeah, that's true. They already knew that.
I'm looking at the USDT price. Yeah, right. It hasn't come back since May. It has been below peg of $1. Interesting.
Yeah, I think there will always be a problem of liquidity because they have to be invested to be able to pay out yields in their coin. So they have to invest in some company, some real asset, and invested in a real asset, you always have liquidity risk. And other risks.
I think it's going to be very hard to convince someone, unless with radical transparency, to convince someone that you are able to generate, consistently some super high yield, like 20% on a year-by-year basis. Consistently, I mean, there's funds very few funds that can do it very consistently in the world. In terms of, they're dealing with stock markets, forex, commodities, everything. I think it's a very difficult proposition. I think much better solution and a much better model that I'm seeing is revenue sharing. Any kind of tokenized solution on blockchain that's doing the kind of staking related to the yield from staking is basically the yield they get from generating revenue on the blockchain. So they're sharing revenue with the stakers pro rata, so proportionately with the stakers. I think that's a really good sustainable model. It's always I always ask then, okay, but who has the power to determine like who gets what, who gets how much? Like, can the developers just change the code and then all the fees go to them? I mean, what happens then? Obviously there's many things that have been tried and many things that haven't been tried, and I think we're going to get to see all of that in the future. And that's just one model I've been seeing, and the token now the blockchain that I have in mind was built on Luna. At first, that's Kujira, so it was the liquidation protocol. So liquidations would go through this Kujira. Now they made their own blockchain through Cosmos. So they launched their own blockchain, and now basically what they're doing, what they've done before, the revenue share model, which was already successful before, but just because of the Luna collapse, obviously it took everything down with it. So now they're rebuilding on a different blockchain, and I think they've already have a lot of ambassadors, at least on Twitter.
True. We have, just a brief explanation, we have like a concept in economics, which is the normalization of yields across sectors, which means capital will flow into the direction which is yielding higher returns. Then as more capital goes in, the yields go down, and also in the end, like in the perfect world, all yields would be the same because capital is flowing into where yields are higher and bringing them lower, because you have to invest in something real to produce, and in the end all yield should be right about the same. But so it's just like illustrative of what you're saying.
That's why the 20% yield on stablecoin was so interesting.
Yeah.
There was what, 4 billion or 5 billion locked in total value locked in Anchor at some point. It was a ridiculous amount.
Yeah. At some point it had to come down.
Yeah, it came down, and it brought a lot of the value locked and other blockchains down with it. Okay, if you check the numbers today versus what they were, it's painful to see.
Yeah. I think this leads us right into macro. It's like it's the next step.
It's a good question. Do you guys think the macro had anything to do with the Luna collapse? Do you think it's related somehow?
Rafa, do you want to start?
I think it was I think it was a little bit, not 100%, because if you see, it was like in May, and the Fed didn't start raising rates. Like, we saw inflation coming up, but in the market, I think it was like a lot of more FUD on top of Luna, because we know that he revealed he was buying how much BTC he was buying, like, and all these people that were against it, there was like being sincere saying about that, how Luna is gonna collapse and everything. Like, Dokwa literally said everything, that what's gonna happen, what happens if UST comes down to 0.98, he's gonna start releasing the reserves of BTC. He started with 3 billion, but then BTC fell another 30%. Those 3 billion weren't 3 billion anymore. It was like 2 billion, and then I think it was like kind of domino effect, Obviously, it was kind of the macro situation, but it was like always people on the inside, and I don't want to get into too much details because Luna was also moving funds from the Curve 3 pool to the 4 pool. There was like a huge liquidity on the Curve protocol for the stable coins, and some stuff happened there. But after Luna, that was obviously, we knew that some more stuff was going to happen, because like you said, 20% fixed yield annually in dollars, nobody's going to offer you that, and everybody wants to have that piece. And even there was like a family office here in Brazil, I saw on the news, I think it was in November, they were raising funds, like I think it was 100K reais, so they can invest your money into UST on Anchor. I don't know what happened to them, if they actually got their money, but like we know that a lot of funds, a lot of banks, a lot of institutions that on the back, they were like getting the clients' money and putting on Anchor protocol, and that kind of collapsed. And then obviously, Celsius was involved in Luna, Three Arrow, kind of, you know. I still think there's a lot more to know who was involved in Luna, and there was like a huge misconception on like CeFi and then the DeFi, because on Luna we could see everything happening on chain, and if those other like CeFi companies were also on chain, we would know like how bad the situation is. And since we don't know anything since April and May, the collapse happened. We saw like in June another like three funds collapsing, companies is still like firing people. And I think for the next 6 months we're probably going to see like more news of companies collapsing because of Three Arrow, and then it's going to link it to Luna, it's going to link it to Celsius, all this contagious. So yeah.
Yeah. For me, I'm a macroeconomist, and I see things through the financial lens. And so obviously it had a huge importance, but it was the perfect storm. There was a lot of factors who played into it. I think Rafa told us most of them, and those were they were mining the confidence in UST and Luna. Then we came in the macro and simply put the nail to the coffin, and everyone was just like, yeah, this is not holding on to anymore. It's impossible to have those types of yields with interest rates coming up. You can't bring in as much money as before, and it was all kind of a big Ponzi scheme. Even though there were like underlying fundamentals behind it, it wasn't simply a Ponzi. But in the end of the day, it proved to be a Ponzi. Whenever people stopped coming in, interest rates rose, everything fell apart. So it's quite clear for me.
Yeah, Andras, we've been like in this downtrend for the past 6 months, and you've been to a lot of crypto cycles also, a lot of those 80% crashes, 85% crashes. And but this time I feel like it's a little different, because on those back of those times we weren't like raising hate rates globally. We didn't have a war, we didn't have COVID back then. And I think this crypto winter is going to be like a little different, and I want to see like your input. What do you see like globally that could help more the crypto industry, you know? Like, do you think when only like in 2 years, when like everything actually like settles, what do you think?
I'd just like to
Oh
add
yeah.
that it's really important that the relationship between the big financial institutions rose a lot with crypto, and that's a huge detail we can't leave out. It's really important. If we were in markets like 2017 or 14, it would be just like a small wave, like maybe one or another crypto over leveraged uh, uh, institution went bankrupt. But now with rising relationship with the real financial institutions, we have like much higher contagion, and things are much worse. And for the first time, which I've been saying for the last few days, it's like for the first time in my life, I'm seeing a period with low liquidity. My whole life as an investor, and I think everyone here, we have always seen easy liquidity. You need money, you get money. It's pretty easy. Now the scenario is changing.
Yeah, we've seen, high liquidity. We've been in a high liquidity environment for the last 12 years, I guess. I mean, different parts of Europe have needed different, longer or shorter periods of time to get out of the economic crisis. I know Slovenia, where I'm from, we had the crisis grip was on pretty much all the way to 2015. So, lending was constrained all this time. So I pretty much lived it. I still remember very vividly, even the time from 2007 through 2010 and how the crisis struck. Obviously didn't understand at the time why. Just like how we are trying to understand what's happening right now, and we're having a difficulty because the environment is so complex. Crypto is a new asset class that hasn't existed before. You know, you can call it an asset class now. You couldn't call it that 5 years ago. 5 years ago, it was a speculative currency, speculative whatever. You know, you couldn't even put a name on it. Now it's a whole asset class, and everybody, the entry of all these institutions, global, renowned banks, you know, big names, are making it making it a credible investment, and made it a credible investment. I can, you know, I've seen a lot of chatter on Twitter around that many banks, you know, took out their bonuses for the year. That's why crypto started dropping it after 69,000. That's one of the theories. It kind of makes sense, you know, it aligns with what happened. It wasn't the time of macro though. Macro was still very strong at the time that crypto topped out, so crypto was a little faster. Um, but I think it's very much related now, and we've never seen Bitcoin or any crypto go through a recession. If you guys remember, Bitcoin was created because, you know, of the irresponsibility and you know, mismanagement on the side of banks and governments. That's one of the big reasons why decentralization and Bitcoin as a peer-to-peer currency was created. Obviously, there's a lot of benefits to underdeveloped or nations that have, you know, huge inflation. That's like a given thing. With for other nations, for other people of the world, it's mostly a speculative asset. But I still think it has a lot of value when you get into it. There's a lot of intrinsic value in Bitcoin that many investors don't recognize. Many of the famous global investors like Warren Buffett, you know, consistently criticize it. But I think he's just one of the few that just don't understand or don't want to understand it, just because he's just, I don't think he's the right guy for this. I'm not gonna say he doesn't. He wouldn't get it if we got into it, but he's a different generation. And there's a lot of really big, credible names that have had a lot of great arguments about why it's a very high potential asset. It's not a liability. It's not a commodity. It's an asset. It's something that is going to have a really big, important, It's going to be an important part of the economy in the future, and I think we need to take that into account. And yeah, now macro is pulling everything down. Like I mentioned before, not crypto, consumer sentiment is beginning to approach all-time lows. You can Google like various institutions that do this research. Like, we are more and more fearful, which makes sense. Like, you know, everybody's talking about the world economy collapsing for this and that reason. We have a bunch of bubbles. The crypto bubble is one of those that already kind of went boom. And then we have stock bubble that's kind of breaking down slowly in slow motion. And then there's another big bubble that they say it's coming from the USA. It's probably going to originate in another global economies as well, which is there's an oversupply of real estate. There's an oversupply of homes, of apartments. You know, I see that. You know, when I look around, there's still so many apartment buildings being built around me, and I hope they have buyers, unless otherwise I'm going to see all these like half-made buildings around my city. You know, it's going to look terrible. But that's happening. You know, sales of new home sales are dropping, interest rates are going up. It's all related, you know, and the Fed is trying to taper inflation. At the same time, it's going to taper demand. They're trying to cure something, and the only thing they have a single weapon for everything, right?
Yes.
The only thing they have is they have either buy bonds or sell bonds, right? And now they're selling, they're doing quantitative tapering, right? And they're doing it at accelerated pace. They're even going to raise rates for another 75 base points in the next meeting they have, you know. And I've been following these meetings. It's so funny because the stock market is just so weird. Every time Powell has this announcement, okay, yes, we're going to raise interest rates 75 basis points, the market rallies. It's so insane. It's like, okay, everybody wanted it not to be more than what was already, you know, rumored. So the Fed is being
Yes.
very effective with creating these like rumors or like hints, like hint, we're going to raise 75 points. Don't tell anybody, but please just make sure everybody knows. Um, and then the official release happens. So, phew, it's not worse. Great, amazing. Let's go, bull run. But the fact is, they can't stop. They can't stop a recession. There's going to be a contraction in demand. We're already starting to see that because of the supply chain crisis, because of the rising electricity cost. You know, the Russian-Ukrainian conflict is really causing a huge problem here in Europe in terms of gas, oil, gasoline, gas, and electricity. Electricity is going crazy. Gas is up 800%. Electricity is up 400%. And if these prices continue, like we're going to see a lot of European economies in trouble. Probably a lot of other global economies in trouble as well. But the conflict has, major effect here because we have these pipelines. It's so funny. The countries didn't work on their energy independency in the past, and now they're trying to let's embargo the goods they're importing to Russia. We're gonna show them, right?
They have been
And what we're
shutting
seeing
down
is
thermonuclear for the last few years, even though
yeah.
Russia had already invaded Ukraine since 2014. And now all of a sudden they're like, oh, it's a great idea. Let's everyone stop buying from Russia, one of the biggest oil producers in the world. It's like, okay, great idea, boys.
Yeah, and then they realized, oh wait, but we can't stop buying. Where else are we going to get it from? So the reality, the idea was great. Like we have this power, we're the really important buyer, but then we realized like not everybody wants to stop buying, and we don't really have any good alternatives. So what that caused an instant spike in prices, and now prices have been going up. Like if you could buy like a commodity futures of oil and gas and energy last year, you should have, because this would be like such crazy gains right now. You would you would love that financial decision. Yeah. Unfortunately, this is something you need as a company or as an individual to survive. To operate, right? It's a necessity. It's like you need food and water, you need electricity. It's basically we become dependent on electricity. So, like for example, we cannot run our stores without energy and gas. And now energy is 400 euros a megawatt today. Forecast for next year, the futures for next year are around there, so 360 euros per megawatt hour. And the amount of strain this is going to cause is already causing, but is going to get worse in this end of the year and the beginning of the next year, 2023. It's just unprecedented. And I don't see this not having a substantial effect, possibly even collapsing certain economies. Possibly, I see this is going to cause many companies going bankrupt. So it used to be a real estate lending bubble. Now the bubble is coming from somewhere else. The pattern is very similar. Reasons are different, but the pattern is repeating. So when you try to learn from these past events, when you try to learn from the 2008 recession, I can give you the numbers. Like we went down, and the stock market went down around 54%, and it lasted for around 510 days.
Wow.
That might be a model we can use now, but probably going to be worse because the reasons are different. We have way more bubbles than we had before, right? And how do you bail out countries, right? You had to bail out banks before. Now you have to bail out countries and their central banks because it's going to become unmanageable.
I think the worst part is the strength of the dollar, because you're saying about like collapsing economies. Yeah. We see we've seen this in Sri Lanka. I don't know if you saw that on Twitter also. Like they're all rioting. The president flew the country. We're seeing now in China the POBC in some cities. They're not paying their depositors money anymore. So I think we're still gonna see in other emergency countries like their collapse because of the strength of the dollar. And even like when you look at year to date from every other stock exchange in dollar terms, they're like down more than 25%, 30%, and then 40%. And they're all the currencies are also like kind of collapsing. So Yes, until we can see like the dollar start falling and everything's gonna be tough.
Some investors are saying that commodities are one of the sure indicators of the beginning of a recession. And now we're starting to see that commodities are beginning to draw down. Like one of those is copper. Copper, I think it went down like 25% in the last few weeks, which is the beginning of the said recession. You know, I'm not saying it's, you know, like I said before, full disclosure, I'm not a macroeconomic expert. I'm just, you know, reading all these different opinions and views on this. Definitely something's happening. Everybody's expecting it to happen. We've already started, but I think we barely just started. Like in the past, small drawdowns like this in the stock market, general stock market, I mean, in the indexes, were you know, manageable and expected. And now everybody just thinking, oh, we're gonna have a 20% drop, but then we're gonna continue. We can't continue. Like, this was everything. We were on steroids for the last 2-3 years. We were on
always buy the dip.
Yeah, buying the dip. You know, they were printing trillions of dollars, trillions of euros, trillions of yen. Everybody was printing trillions of money and throwing it into the economy, basically subsidizing the economy, subsidizing the stock market. And, you know, if I take you off steroids, what's gonna happen? You're probably gonna, you know, lose a bunch of weight really fast. And that's what's going to happen. Like, we stopped that now. European Central Bank is going to start raising interest rates late, but they're going to start raising interest rates. First raise is July 21st.
It's the first time, I think, in 30 years or something like that, they're going to start raising rates.
Yeah.
Yes.
I think it's a really good point. Like, the Fed's toolkit is terrible to deal with inflation when inflation is due to supply problems. And they want to keep the economy on steroids, but they only have a single gun. They only have a single needle to put in steroids, and it's through quantitative easing. And right now, they have to use that needle to take out inflation. But inflation, I think the most fundamental question, which people aren't asking right now, is where is inflation coming from? Because people are like, oh, into inflation, we're going to provoke a soft landing to literally reduce demand and provoke a small recession to decrease inflation. But is that really like the solution to decrease inflation? I in my view, it's like that's the problem right now. Everyone's counting on central banks to do what they can do. And what they can do is only either give money or take money away. And when you depend on a single variable to control inflation, and inflation isn't due like to excessive money, it's due mainly through supply chain disruption. Like, we don't have containers are really expensive, they're going to China, not coming back, and wow, we have so many problems in supply chains. And so then we try to beat inflation by taking money out of the economy. So I think we're in for a tough period unless central banks, the Fed mainly, changes their policy like 360 degrees. They go just 180 degrees actually. They just go totally the opposite side and come back with quantitative easing. But wouldn't that just like postpone the problem? Because we have a problem. So I think that's a good question.
I don't even think they can postpone the problem anymore. I think the bubble is just too big to maintain.
Yeah.
That, you know, and I think they realized this at some point. So they just decided, okay, we cannot solve this from collapsing, so we might as well, you know, build up some leg room, because, you know, you're at zero interest rates, you're buying bonds, you're inserting all this credit, all this money into the system. There's what else can you do, right? I mean, obviously, you could come up with more degenerative ways of speeding up the economy, but that would just, you know, prolong the inevitable, delay the inevitable. So they just at some point decided, okay, this is inevitable. We need to like build in some leg room. We need to increase rates. So when the time comes, when we need to, like, when we see that the economy can reset again, we're going to decrease them again. So it's basically just to take the credit, probably, that
but
we've successfully battled inflation, and now we can go back to zero interest rates, and all thanks go to us.
But I think that creates another problem, because with rising with rising CPI, inflation, you have the real interest rates become negative. And I think we're still in the US at 98% if you look. So it's like, how much will you actually have to rise to make rates if you want to create a demand shock? So that's,
yeah, it might be a lot more than we expect. It might be a lot more. In the past, if you look at the historical data, interest rates have been above 10 even.
yeah.
So
Even though I hate the Brazilian policy, we have like interest policy, we have like 14% interest rate, which is like insane. And you literally can't invest in Brazil. Like, if you're a Brazilian, if you make money in Brazil, just put it all on treasury, because it's 14%. It's like hilarious. There's no point in like trying to make a business if you have some money, obviously, or else you just try to get money to put them on treasuries. But like, we are kind of apt with dealing with inflation. We know we rise rates a lot and really fast. We had like a year back, I don't know, Rafa maybe has the data on this, but we were like in, I don't know, 5%, 4%, and now we're at 13% in a year, and it's almost insane.
I think inflation is going to rise even more. The interest rates are only starting to go up in Europe. You're already at, US is already at 1.7 or something. And it was going to be the next hike is 2.5, and then they say they're going to go to 3.4, 3.8. I think that might go higher if that doesn't cure the problem, which I don't think it will. I see there is a real potential for hyperinflation problem in Europe, not because of the rates themselves, but because of the environment, because of the energy prices and everything. If you're just going to look at CPI and look at how much that's going to inflate wages, because wages, at least that's how it is in our retail. We have this thing called the collective retail contract. As an employer, we signed this with all the unions.
Yeah.
And it basically adjusts wages, minimum wage every year based on CPI.
Yeah.
And based on inflation, actually, but CPI is one of the main ingredients in inflation. So inflation is what, 8.6 right now? And if we take into account the rising energy prices, that's something you can't just, write off, or that's not something that you can just subtract from your revenues. That's going to significantly impact your cost such a way that you're going to have to raise prices. And if you do that, that means you're going to cause more CPI inflation, which means you're going to cause more wage inflation. And the cycle is a positive feedback loop, right? I don't know where it leads, how far it goes, but I can see us going into the 20, 30, 40% inflation territory really, really quickly in a year, 2 years time. So that's just the math we were doing today. Like, how much is our wages going to increase in the next years if electricity stays or rises from the levels it's at today? Electricity is a huge problem. It's a big factor. If you're a manufacturing company or if you have any kind of high energy usage, but you don't even have to have high energy usage. You could just have, ineffective lighting. Lighting that uses a lot of heat. Even I got a friend that makes ice. He has these huge ice machines that use a lot of electricity. Yeah. His share of electricity in his cost, I bet, is like 10% at least. And then the rest is labor and logistics and whatnot. But if that's 10%, it's going to be 40% next year, or at least 20, and that's not going to come out of his pocket. He doesn't have. Businesses don't have that much profit margin available. Yeah. Not usually. I don't know what kind of business does.
Brazilian business.
You have to raise prices. I don't know your businesses.
No, Brazilian business, because if you don't have at least like 15%, you just put it all in treasuries. That's the point.
Yeah. Exactly. Yeah. So it's going to this is a systemic problem that we have right now. I think all of Europe is having. I was showing you the map before. Great app. I can show it again for the video. Yeah, Europe is red. Those are the in Europe for today. And
That's
everything's
insane.
red. It's at around $400 per megawatt hour. And it was peak of last year was 200, but we began the year below 100 per megawatt hour.
Mhm.
So way below 100. We were at the beginning of the year, we were around 70 or something. So prices really, really increased. Cost really increased. So it's going to leave a mark.
Let's all move to Sweden. I think it's like the main
Yeah.
takeaway.
I was the only one in green there, right?
Sweden is green today. It's amazing. It was yellow in the morning. It's green in the afternoon. Amazing.
Yeah.
Nice. I don't know if I have any more questions, Arthur.
I think that's
we had a
about it.
really good chat.
We could
Yes,
chat like
thanks
for
very much, Andras.
much longer, but
I know I have a lot more notes. I know, we could chat forever.
we can leave that for a second podcast.
yeah,
To
it
see a
was
follow
awesome.
up with you
Sure. Let's see how it
after
goes.
all
Let's
this
get some
mess
feedback.
kind of settles. Yes, of course.
But it
Amazing.
was
Feedback, yeah.
great talking to you. Always great talking to you. So many insightful.
Hey, I hope I'm wrong. I hope I'm wrong on those things.
We all do.
That's another thing I have to say. I hope I'm wrong. I don't like to predict. I'm not predicting anything. I'm just saying what I'm reading. I'm just relaying it forward.
Yeah.
True. Amazing. But yeah, we are all seeing, I think, the same thing. And I hope everything settles and we go back to a bull market maybe. That's all we pray.
I think
Yeah, it might take a year or two.
this leads in like perfectly into what we've been saying, like in the crypto world. It transitions like perfectly, which is look into the fundamentals, look into the cash flow of companies or cryptos that you're investing in, which are in last instance companies. They need cash flows. This is a moment to have cash. If they don't have enough cash to survive the next year or two, they're not good investments. Be very careful with that. And I think that's just like bringing it all into the crypto reality. It's be careful. This is like a tough market. It's really hard to navigate. Like Andraž said, most people are terrible traders, including us at most times. So don't try to trade stuff. Just like, hey, look at the fundamentals, look at cash, look at like the business side of things, and leave like speculative investing for the bull market.
I agree. That's great advice.
Good point. Good point. Well, thanks again, Andras. Have a good day.
Thank you, guys.
Thank you, everybody. Muito obrigado a todos.
Obrigado a
Muito
todos.
obrigado.